I know that we often feature videos again from our friend John Chang and Marcus Millichap. This is well worth including as an update on the fundamentals of commercial real estate and how they vary from sector to sector. And he's talking about what's happening with CRE supply and demand, not necessarily the sales market that we've been talking about over the last couple of weeks, but really what each sector, how many renters are there, how many things are getting built. For office, it is a story of low supply, even lower demand. All of the ancillary
get out of office.
Didn't
get out of office.
You read the Wall Street Journal, Bloomberg, Forbes, whatever. If they're talking about CRE and they're using the word threat or vulnerable or systemic risk, they're talking about office real estate.
I'm so glad I was given some advice, years ago of just avoid office.
Yeah,
and I was like, office is a neat place to stay too. Yeah, and it's the easier to deal with. They're professional. They can wear a suit and tie to the lease negotiation, and it's all nice and easy. And then it's like we don't need offices. Yeah, that's the case, but like
even a little bit, can have a lot because it's multi-million-dollar industry, billions of dollars.
Yeah.
And it's changing, and that's the story. Low supply, even lower demand. Retail is relatively low supply, but demand has been remarkably steady.
Yeah.
And they're really on track to kind of improve in terms of
that makes sense. People still need stuff, services.
Yeah. They never really fell off as dramatically as maybe was expected during the pandemic, but it's definitely it's coming back, and
it's a good trend.
Signs. So industrial, and I'm skipping ahead. I'm not dealing with apartment just yet because I've got more to say on that. Industrial. There's lots of supply coming online, up to 2.3% of current inventory expected to be added this year. All that supply may not arrive because of continuing construction issues. The vacancy for industrial, maybe slightly softening demand that is expected to pick up in the next few years as retail picks up.
2.3%. Sorry, Matt. 2.3% of inventory being delivered, but 12% vacancy rate. 2.3% is not huge.
Yeah. It's going to be difficult to get to that 2.3, I think, because of the construction issues. And he elaborates on that when his discussion of the apartment market. Now, apartment, look at that boat. I know. That's sweet. So Ford apartment demand is lower and supply is higher. So apartments, on the face of it, you'd think, okay, lower demand is what they're saying, higher supply. This means trouble, particularly for investors. Now, that's not necessarily the case because, starting with supply, John Chang reports that, yes, a historic number of completions are expected this year, 2.1% of existing supply, 400 units, but they may not all be completed this year. He referenced conversations with developers, and basically they're saying, the quote is, their projects are behind schedule and their completion dates are slipping. Labor, commodities, materials, they're still not all resolved. And I think that we're seeing a ripple effect in just certain select commodities. It's going to be hard. And as for the demand side, however, currently, or maybe if you're thinking about Q4, sagging consumer sentiment caused by high inflation that really stalled household formation. But he does have a caveat. Now, I do appreciate the focus on household formation, and we have the graph up here of household formation and it really shows you a good idea of where apartment demand is headed. Because if you just look at inside apartment demand, you don't really get this sense of how apartment demand is a product of larger economic.
I'm glad you improved this graph, Matt.
Yeah.
Of household estimates in just talking about how many households we're gonna need, because that's the bigger driver than anything.
Yeah.
That's what's gonna keep driving and pushing. Man, the pandemic was crazy. But again, back to physics and math, man. Which I am not a math person. Like, I've got some really smart math people around me. Don't even go to my learning styles, but this is a period, that's a period, this was a cycle.
It went down, and now we are very much at the median. If you just kind of glance at this, household formations look pretty normal to me.
Yeah, it's amazing,
and they're heading up now, gently heading up, but still, household formation is not sinking, not near the bottom. It's at a pretty decent rate, and the same thing for consumer sentiment. Now, I will put a caveat on consumer sentiment because it seems like as time rolls on, people get sadder or people get less. The sentiment decreases because the average
existence,
I guess so because
higher
it does
lower highs, lower lows here, Matt, on the chart for general. And this is so your take is obviously some correlation to like recessions but in general, people are just getting their perception of their sentiment is progressively trending that downwards.
Yeah, and I do not like surveys based on something that is as vague and amorphous as sentiment. I think sentiment's very much based on relative conditions. So like
there's a lot. Sorry.
Yeah. No. There's just I don't know if you were going to say this, but there's a lot of things that could make someone fill out that consumer sentiment form and act like they're sadder than they are. And a lot of it is just like, how were you yesterday? And it's not necessarily how you were relative to 2005.
No, I can I make a couple just observations based on this graph, Matt? Mm-hmm. Okay, and this is going to go back to our conversation last week on Gen Z teenagers and whatnot. They're all depressed and they think things aren't good. And this sentiment survey kind of lines up with that. Big difference I see in the change in the trend. Look at the 90s, Matt. I mean, that's a pretty distinct economic cycle.
Pretty nice.
But the 90s, the 90s were a positive place.
Yeah.
Post-Soviet collapse. United States, really the only superpower in the world. We're in charge. Mm-hmm. Democratic values. Seeming idea that politics somewhat work in this country. Although you go back in time, and then people might disagree. Obviously, we had Timothy McVeigh and all that stuff. We had a bunch of stuff domestically, but relatively, people were positive. It was the 90s.
Yeah.
Star Trek Next Generation. That's what was going on in the 90s, Matt. We have this idealistic future going forward. What happened just after 2000 when this changed? 9/11, War on Terror, Patriot Act, completely changed the world.
Yeah.
We all know how it did. Things changed. There was a recession, obviously tech bubble burst and everything. And again, 9/11 played a big impact to that because people were just, the stock market did not do good after 9/11. I'm thinking we're going to rally for America, but not really. Man, it's on a downward decline ever since. Now, obviously, the great financial crisis, things were very sad. Things were sad because everyone was like, we're going to have, you're never going to get a job, never going to make any money. And New York City is going to look like the streets of Jakarta in 4 years. That's what I was being told. Now things got better. Sentiment went up. That's nice. But again, lower lows. We never hit the highs of the 90s. Yeah. The peak when everyone was happy, January 2000. January 2000. What was in January 2000? Well, I guess George W. Bush just, right? Yeah. He just took office. New president. Clinton, we had a balanced budget years before that. We got a new president. Things are good. And for whatever reason, new president, so we're hopeful again. 9/11 decision, just the world's changed. Got to go through TSA. You got to get patted down. They're going to grab you wherever they want to. Really bring on a little bit of a police state. Indefinite. All kinds. We changed a lot of things in the world back then. A lot of drone strikes, good, bad, good, bad, and the ugly. But man, people are not happy anymore. And this is why this is what Gen Z. This is the world that they lived, that they grew up in.
Yeah.
This period. And we got happier than this last cycle, even though it was like one of the longest bull cycles. Great period, low interest, free money, just shooting out free money everywhere. We got kind of happy. We got to the mid 90s happiness levels. We kind of plateaued. And then, pandemic, obviously, we were incredibly depressed. We had this period here, in the, sugar rush of free money here, post-pandemic. That we were like, oh, things are good. Money is absolutely free. And this was in, April of 2021, 2 years ago. Money is free. The flowers are blooming and all, rents are rising, wages are rising, and inflation isn't that bad just yet.
Not yet.
Inflation's bad.
Yeah.
Not too long. Well, really a year after that point, really talking about, March of 2020. Wow, look at that low point. I'm sad. Things are good. And then people kind of realize down here in January of 22 or June and July of summer, wow, these interest rates are really going up. They're not stopping now. it's increased. Why is it increased, Matt? Everyone says that we're going to go into a recession, or is it just volatile and all is good?
Well, okay. So I think
that was my whatever 5-minute take that you can edit out.
No.
If you want to, but is that
no? I think
good. Bad?
I think it's good. I think it's a decent analysis. I think you see the current situation right now. Yeah, exactly. It's measuring happening is difficult, and I'm thinking these people are filling out these surveys wrong.
Yeah, then we forget to live is to suffer at some point. Yeah, we have to just detach ourselves.
This is my kind of ultimate take here is I don't feel, now this is on my own experience and everyone has, everyone's sentiment's different, but I don't feel like things were as bad as they were during the recession in the past 3 years, economically particularly. Now, the numbers up for the consumer sentiment survey would say that our numbers from, January 2022 till now, we were at the same
happier.
Yes, we're getting happier, but we are at the same level of consumer sentiment as we were at the bottom of the recession. So that's where we were, and I don't think that's fair.
Crisis?
Yeah, the great financial crisis. I don't think that that's fair.
I think that's a really good point, Matt. It's a really good point. We are lower. Yeah, I wonder if there was any part of the great financial crisis that seemed pretty existential at the time.
Mm-hmm.
But is there more uncertainty revolving just more things? I mean, here's another factor that wasn't going on. And we had the war on terror, but, people were starting to pay attention at that point, 2006, 2007, 2009. I mean, obviously still going on, but